Imagine stepping onto a chaotic trading floor. You know, flashing screens, brokers shouting, just a whirlwind of information and emotions.
Oh, yeah. It's intense.
It's intense. But you talk to any experienced trader, and they'll tell you the real battle isn't against the market. It's against, well, themselves.
You hit the nail on the head. That's why this book, The Disciplined Trader by Mark Douglas, it's so valuable. Developing Winning Attitudes, that's the subtitle. And it really digs deep into that whole psychological side of trading.
So we're going deep on that today with this book as our guide, The Disciplined Trader.
Absolutely. Whether someone's, prepping for some big investment meeting or maybe just trying to brush up on market psychology, or even if they're just curious about how the best traders think, this book's got something for them.
And it starts out with a pretty fascinating fact right off the bat. It says that being a successful trader, it's something like 80% psychological.
80%.
And only 20% methodology.
Exactly. Your mindset. Way more important than whatever strategy you're using. And Douglas, he's not just, throwing out numbers. He's drawing on years and years of experience, both as a trader himself and also as a trading coach.
So he's seen it all.
He's seen how emotions can totally sabotage even the most skilled traders.
So let's talk about those emotions.
Yeah.
Because Douglas, he calls them the silent killer when it comes to successful trades.
Yeah, the silent killer.
So why is that? Why are emotions such a problem?
Well, think about it. When you're emotional, it clouds your judgment. The fear of missing out, that FOMO, right? It can push you into a trade before you're really ready, before you've done your research.
You see everyone jumping on a stock and you just kind of get swept up in it.
Exactly. Or let's say you've had a few wins in a row.
Ooh, feeling good.
Right. You start feeling invincible. And that's when you might take bigger risks than you normally would. You get overconfident.
Ah, I see. So those emotions lead to bad decisions.
And those decisions can be disastrous, wipe out your gains, that kind of thing. And that's why one of the absolute most fundamental things that Douglas talks about is, accepting this idea, ready for it. The market is always right.
Well, hold on. Now that sounds kind of counterintuitive. How can the market always be right? I mean, people lose money all the time.
Right. But here's the thing. The market, it's like this giant reflection of what everyone believes, all the participants, their actions.
Okay.
So at any moment, the price, it's reflecting what the consensus is, what people think a stock or whatever it is actually worth.
Even if it turns out to be wrong later.
Even then. Because later, people might change their minds. So the key is, instead of trying to fight the market or predict what's going to happen next, you got to understand it.
Adapt to it.
Exactly. It's like this giant feedback loop constantly telling us what the collective thinks, whether we agree or not.
So you got to listen.
You got to listen. And that brings us to another super important point that Douglas makes. The market, it has this potential for unlimited profit, right? But also unlimited loss.
Uh-oh.
It's the scary part.
Yeah, it's a double-edged sword. But that unlimited aspect, it creates this really unique psychological environment. There's no clear starting point, no ending point.
It's just going all the time.
All the time.
Yeah.
A perpetual motion machine. Exhilarating. Absolutely.
Yeah.
Terrifying. Oh, yeah, definitely.
So how do we wrap our heads around that? How do you deal with that, constant movement?
Well, Douglas, he compares it to going from this really structured world, everyday life with rules and routines, into this completely unstructured environment where anything could happen.
So it's like going from a nice organized office to the Wild West or something.
Yeah, kind of. Think about it. In most parts of life, you've got guidelines, expectations, maybe a boss telling you what to do.
Right.
But the market doesn't care about any of that. Doesn't care about your plans or your predictions. It just IS. So how do we navigate that?
Yeah.
That chaos, that lack of structure?
Well, Douglas, he talks about creating what he calls a personal structure.
Okay, what's that?
It's basically creating your own mental framework and your own set of rules so you can interact with the market in a way that works for you.
Okay, so you're bringing order to the chaos.
Exactly. Defining your goals, understanding your risk tolerance, that kind of thing. It's about being disciplined, taking control of your mental and emotional state, instead of letting the market control you.
Because if you don't,
it'll chew you up and spit you out.
All right, so you got to have a plan. And this leads us to, I think, a really fascinating point that Douglas makes. He says, reasons don't matter as much as you think.
That's a good one.
Now, that seems counterintuitive, right? Don't we need reasons for why the market's moving a certain way?
Our brains, they're wired to look for explanations. We crave them.
Makes sense.
We try to make sense of things even when things are kind of random. But Douglas, he argues that getting too caught up in the reasons behind market behavior, it can actually be a trap.
A trap. How so?
Well, because the market doesn't have to follow our logic
Mhm.
or meet our expectations.
It does its own thing.
It does its own thing. And if we're fixated on reasons, we might miss what's actually happening in the price action itself.
So instead of asking, why is the market doing this? We should be asking,
What is the market telling me? Focus on that. The structure of the market, the patterns, how everyone else is behaving, not the reasons.
don't overthink it. Just look at what's actually happening.
Exactly. You know, Douglas tells this really interesting story about a social experiment. Someone stood on a busy Chicago street just offering free money to people.
Free money.
Free money. But here's the crazy part. Most people wouldn't take it
Really? Why not?
because they couldn't believe it. They thought there had to be some catch, some hidden reason.
Their beliefs got in the way.
Exactly.
Yeah.
They couldn't accept the reality that was right in front of them. And Douglas says that's the same way it is with trading.
Interesting. So how we think about the market, those beliefs we have, they really can shape our outcomes.
They really can. If you think trading's all about gambling, well, you're going to trade like it's gambling. Impulsive, reckless, that kind of thing.
But if you believe it's a skill you can learn, a craft,
Then you'll approach it with a lot more discipline, a lot more of a growth mindset, and ultimately you'll have a much better chance of success.
so you got to get your mental game right.
It's the key.
And speaking of which, Douglas talks about these 3 stages that a winning trader goes through. The first one is the mechanical stage.
The basics.
Yeah, like learning the rules of the game before you actually start playing, right?
Exactly. That's where you focus on the mechanics of how everything works. Order types, basic charting, understanding risk management. You got to get those technical skills down.
So you got your toolbox. What's next?
Once you got those basics down, you move on to what Douglas calls the subjective stage.
Okay. Subjective.
This is where you start to develop your own style, figure out your own risk tolerance, experiment with different approaches, see what works for you.
I feel like this is where a lot of people might get stuck.
You're right. This is where a lot of traders get trapped in a cycle of relying on their gut, their intuition, instead of having a disciplined approach.
They haven't quite mastered that mental game yet.
Not yet. They let their emotions get the better of them. They haven't figured out how to react objectively. But when you do,
Then you reach the final stage,
the objective stage,
and that's where the magic happens.
that's where things really click. This is the stage of mental clarity, emotional control. The objective trader, they see the market for what it is. They're not controlled by fear or greed. They execute their trades with precision. They manage risk like a pro.
Sounds pretty zen.
It is. They've become masters of their minds. And this is where all those insights that Douglas gives about our mental framework, they really come into play. He breaks down how our memories, our associations, even just our beliefs, they all shape how we see the market.
So self-awareness is key.
Absolutely. If you can identify those limiting beliefs that are holding you back, you can create a mental environment where you can actually thrive.
You can trade with confidence.
Exactly. And here's the thing. The key to all of this is adapting. Because the markets, they're constantly changing.
Always in flux.
Always. The only constant is change. So you got to keep learning, refining your mental game, expanding your knowledge. That's how you get an edge.
So you got to stay flexible, stay adaptable.
Beyond it.
Douglas, he talks about this seminar where people walk on hot coals.
Oh, yeah, the fire walk.
What's that got to do with trading?
It's about the power of belief. If people believe they can walk on those hot coals without getting burned, they often can.
There's a mind over matter thing.
Exactly. And that same principle applies to trading. What you believe about the market, it can literally shape your reality. If you believe you can succeed, you're much more likely to put in the work, overcome the challenges, and ultimately achieve your goals.
So our beliefs shape our reality. That's pretty powerful stuff. But how do we actually identify those limiting beliefs? And once we do, how do we challenge them? What are some practical steps?
Well, Douglas, he actually gives a bunch of techniques in the book for changing your mental environment, how you think about things. And one of the most powerful ones is, well, it's surprisingly simple, just asking yourself questions.
Okay, like what kind of questions?
He suggests just, writing down your beliefs about trading, money, winning, losing, whatever comes to mind.
Just a brain dump.
Yeah, just get it all out. And then, take a look at each belief and really examine it. Ask yourself, is this actually true? Is it based on facts or is it based on fear? Where did this belief come from? That kind of thing.
So you're kind of holding up a mirror to your own mind.
Exactly. And once you're aware of what you actually believe, well, then you can start challenging the beliefs that aren't helping you. The ones that are holding you back.
Like, for example,
Okay, let's say you have this belief that trading is gambling.
a lot of people think that.
Yeah, and if that's your belief, it might lead you to make, impulsive decisions or avoid taking risks that you should be taking. Calculated risks, I mean.
So you got to change your thinking.
Reframe it. Instead of trading is gambling, maybe it's trading is a skill I can learn with practice and discipline.
Yeah.
Approach it with that growth mindset.
You're not just playing the slots, you're actually learning a craft.
Right. And it's not just about changing the belief itself. It's about noticing how that belief affects you, how it impacts your actions, your decisions in the market.
And that ties back to that personal structure idea, right?
Yeah.
Creating that framework.
Exactly. You're building up this system for making rational choices, disciplined choices, instead of just reacting emotionally.
So you don't get swept up in the moment.
Exactly. And Douglas, he also talks a lot about self-discipline in general. He even has this whole exercise for developing it. It's pretty cool, actually.
All right, I'm intrigued. What is it?
He says, pick a goal, something small, something achievable. Doesn't even have to be related to trading. Just something you can focus on, something you can actually accomplish.
Like what?
Could be something as simple as, I'm going to go for a walk every day this week. Or I'm going to read for 15 minutes before bed.
Simple but powerful.
Right. It's about training your mind to stay focused, to follow through on your intentions. And the more you practice that self-discipline in one area of your life, well, it becomes easier to apply it to other areas too, including trading.
So it spills over.
It does. And I know this all sounds pretty theoretical,
Right, how does this actually play out in the real world?
Oh, Douglas gives tons of examples. Real traders, real stories. He breaks down their thought processes, how they reacted emotionally to different market events, and ultimately how their mental framework shaped their results. Successes and failures, he talks about both.
Got good stories.
Oh, yeah. There's this one about a trader who was absolutely convinced the market was going up. He had all these reasons, all these charts, all this data, right? But the market, it just kept going down.
Oh, no.
And he just couldn't let go of his belief. He kept adding to his position. Even as the market moved against him,
Ouch.
ended up losing a ton of money. Douglas calls it being right but losing money.
So even if you think you have a good reason for a trade, you got to listen to what the market's telling you.
Exactly. If the market says you're wrong, well, the market's right. It doesn't care about our reasons. It doesn't care about our opinions.
It just is.
It just is. And successful traders, they get that. They adapt to the market's reality. They don't try to force their own story onto it.
Let go of the ego.
Exactly.
Yeah.
Douglas also explains how prices actually move. The psychology of it. It's fascinating stuff.
Break down for me.
Okay, so think of it as a giant auction, right? Buyers and sellers, they're constantly interacting.
They're bidding against each other.
Exactly. And each price level, it represents this point of agreement where buyers and sellers meet in the middle.
Okay.
And then as the balance shifts, prices move, like a tug of war. Whichever side has more force, that's the direction the price goes.
Makes sense.
He also talks about these reference points, like previous highs and lows in the market.
Okay.
And they become these psychological barriers. Because traders, they make decisions based on whether they think the market's going to break through those points or bounce off of them.
So the market kind of has a memory.
It does. It's like those reference points, they're these reminders of past price behavior. And sometimes they become self-fulfilling prophecies.
How so?
Well, if enough traders believe the market's going to hit a certain level and reverse, well, their actions can actually make it happen.
Wow, that's powerful.
It is. It all comes back to understanding the psychology, the collective behavior. It's not just about charts and indicators. It's about understanding the forces that are actually driving the market.
And understanding yourself.
Absolutely. Knowing your own mental and emotional state so you can stay objective even when things get crazy.
So all this theory, all this psychology, it's great stuff. But how do you actually put it into practice? How do you become a disciplined trader?
Well, Douglas, he has a whole section of the book called Steps to Success. And he lays out these specific practical steps and trading rules to help you actually apply these ideas to make them work for you.
All right, let's hear them.
Okay, so step 1, dealing with losses. Sounds obvious, right?
Yeah, you lose sometimes.
But a lot of traders, they really struggle with this. They let losses get to them.
It can be emotional.
It is.
Yeah.
So Douglas, he emphasizes predefining your risk. Before you even enter a trade, you know exactly how much you're willing to lose.
So you don't panic and make a bad decision.
Exactly. You take the emotion out of it, you
Yeah.
accept that losing is a possibility, and you plan for it.
So you're not surprised when it happens.
Right. And you don't view a loss as a failure either. It's just feedback.
The market's talking to you.
It is. Every loss, it's an opportunity to learn to get better.
Okay, step 1, dealing with losses. What's next?
Step 2 is becoming an expert at just one market behavior.
One specific thing.
Yeah, instead of trying to master everything, you become a specialist in just one area, one setup, one pattern, whatever.
So not a jack of all trades, but a master of one.
You got it. The more you focus on one specific thing, the more you learn about how it works, the nuances, the probabilities, and that expertise, it helps you make better decisions, execute your trades with more precision.
And that builds confidence.
Which is huge. Confidence is key.
Okay, on to step 3.
This one is learning how to flawlessly execute your trading system.
Sounds important.
It is. Because a lot of traders, they might have a great system, but they struggle to actually follow it consistently.
They get in their own way.
Yeah, their emotions take over, fear of missing out, second-guessing themselves. Douglas, he talks about all these different psychological obstacles that can trip you up, and he gives strategies for overcoming them.
What kind of obstacles?
Well, one of the biggest ones is the fear of being wrong.
That's pretty common.
Oh, yeah. It's human nature. We all want to be right. But in trading, being wrong, it's just part of the game. It's inevitable. At any given moment, half the traders are going to be right and half are going to be wrong.
Can't win them all.
Exactly. So you got to accept that and focus on executing your system. Don't try to predict every move the market's going to make. Just follow the plan.
So instead of will this trade work,
Yeah.
it's if my system tells me to take this trade, am I going to take it?
Yes. It's about being disciplined, not about being right.
Okay, step 4. What is it?
This one's cool. It's learning how to think in probabilities.
Probabilities. What does that mean?
Douglas explains that, the market, it's not a game of certainty. There are no guarantees. Every trade, it could win or lose.
Right.
And that's okay. It's part of the game. So it's not about trying to be right all the time. It's about understanding the odds, making decisions that have a positive expectancy in the long run.
So it's like flipping a coin, kind of.
Exactly. If you flip a coin 100 times, you'd expect it to land on heads, 50 times?
Right.
Roughly. But it might not be exactly 50. Sometimes it's 48, sometimes it's 52. But over a large enough sample size, it should average out.
The law of averages.
Right. And trading's kind of like that. We're looking for setups, for systems that have a statistical edge, even if it means we're going to lose on some trades along the way.
You can't win them all.
You can't. The more trades you take, the closer your results should get to that statistical expectation.
Okay, thinking in probabilities. What's step 5?
This one's all about monitoring your emotions.
Okay, we've talked a lot about emotions, but how do you actually do that? Monitor them, I mean.
Well, first, you got to be aware of how you're feeling. In the moment. Are you excited? Are you anxious, fearful, greedy? Just notice it.
Check in with yourself.
Exactly. And once you know how you're feeling, you can ask yourself, are these emotions helping me or are they hurting me? Are they leading you to make impulsive choices or are they helping you stay disciplined?
And that's where having that personal structure, those trading rules, that helps.
Absolutely. It gives you a guide so you don't get lost in your emotions. The more you practice this, the better you'll get at recognizing when your emotions are taking over. And eventually you'll be able to detach from them, react objectively to the market no matter what's happening.
So that's the goal, objectivity.
That's the ultimate goal. Step 6, learning to be objective.
Sounds pretty zen again.
It is. The objective trader, they see the market for what it is. They're not caught up in their own opinions or hopes or fears. They know the market doesn't care about their story.
Just is.
It just is. And so they adapt. They make clear-headed decisions based on the information that's right in front of them, not based on their emotions or their biases.
So how do you get to that point, to that level of objectivity?
It's a process. Takes time, takes practice. One technique that Douglas recommends is, try to imagine yourself as a neutral observer.
Like a scientist watching an experiment.
Yeah, kind of. Like you're watching a movie, you're just observing, you're not judging the characters, you're not trying to predict what they're going to do next, you're just watching, taking it all in.
Interesting.
And that detachment, it helps you see things more clearly. You can make better decisions.
You're not emotionally invested in the outcome.
Exactly.
Yeah.
Ultimately, being objective means accepting that the market, it has this unlimited potential for both profit and loss.
The double-edged sword.
Right. And the only way to tap into that potential, to really succeed, is to approach the market with discipline, with a clear mind and with a deep understanding of yourself.
It's all connected.
It is.
It really is amazing, though, how the disciplined trader, it ties all of this together. You know, the psychology, the practical steps.
It does. It does. And I think that's what makes this book so powerful, you know? It really emphasizes that trading success, it really comes down to mastering your own mind more than anything else. And that's what sets it apart from, like, a lot of other books on trading.
Yeah, it's not just about technical analysis or, like, specific strategies. It's like it goes deeper.
It does. It goes into those underlying psychological principles, the stuff that really governs how we behave in the market, how we make decisions.
It's almost like a self-help book for traders. You know what I mean?
Yeah. That's a great way to put it. It helps you understand yourself better and helps you develop that mental resilience that you need to, like, actually survive in the market.
Because it's tough out there. There are ups and downs, and you got to be able to handle it.
You do. You got to be able to ride the waves. And this book, it gives you the tools to do that. It helps you identify your strengths, your weaknesses, build that framework for making good decisions, even when things get stressful.
Well, this deep dive has definitely given me a lot to think about. What about you? What really stood out to you? Like the most important takeaway from The Disciplined Trader?
That's a good question. For me, it's got to be that idea that the market is always right. You know, that one principle, if you really truly internalize it, it can change everything. How you approach trading, how you think about the market, it's huge.
Because it forces you to, like, let go, right? Let go of that need to always be right.
Yeah. You got to surrender to the market. Adapt to what it's actually doing, not what you think it should be doing.
Listen to the market.
Exactly. Stop fighting it. Start listening to its signals. And that's when you really start to see the opportunities.
That's when the magic happens.
That's when the magic happens.
Well, as we wrap up this deep dive into The Disciplined Trader, here's a final thought for everyone listening. If the market is just a reflection of, you know, everyone's beliefs, everyone's actions, what does your trading say about your beliefs?
Ooh, that's a good one. That's a real gut check right there.
It is. It makes you think.
It does. It forces you to look inward, to really examine how your own beliefs, your own mindset, they might be shaping your results, your successes, and your failures.
And on that note, I think we're going to wrap it up. This deep dive, hopefully it's given you some aha moments, some practical things you can actually use on your own trading journey. Remember, the best traders out there, they're not just masters of the market, they're masters of their own minds. So keep learning, keep adapting, keep refining that mental game. And as always, happy trading, everyone.